Welcome to Life Planning 101, brought to you by Smart Money Group and Kennedy Financial Services in Eastland, Texas. Tune in every week as we share important information to help you and your family live life on purpose. Insurance, investments, legacy and tax planning, and much more. All covered now on Life Planning 101.
Here we are with another episode of Black and White Market Minute on Life Planning 101. Matt Ervin and Aaron Kennedy with you today on this beautiful Friday. We're kind of getting dried out from some of the rain, but we'll sure take more. I'd say it's pretty warm out, Aaron, but something that I hopefully is cooled off. I don't know, maybe the Fed. Maybe for just a minute, the pause, right?
Everything's cooling off.
So, anyways, tell us what happened to the Fed this week and what's going on.
Oh man, it looks like the Fed's getting serious to a point. It still seems kind of like they're trying to balance what the market wants versus what Powell wants. Thought it was interesting. He did pause in this meeting that he came out on Wednesday. So there was no rate hikes, but he stood firm on belief that rates were going to have to either stay higher for longer or they were going to have to increase again by the end of the year. Looking at the dot plots, that's exactly what's being priced in is another quarter point. But which one is it? If inflation is real and we're going to stop it, why are we pausing?
And Aaron,
it hasn't been his view to wait and see how this plays out, so it gets a little confusing there.
What does the higher for longer mean? Like, is there any guidance on that? Is that like thinking a year, 2 years, or is it just basically wordsmithing at this point? Like, tell me more about that.
It's wordsmith. Market was actually expecting that interest rates start to go down by the end of this year or first quarter next. So we're going to get back to the easy money, and growth is super cheap, and they expected it to happen. I mean, very, very soon, either fourth quarter or first quarter next year. And Powell's reiterating that that's not going to happen, that this inflation is going to be sticky, and it's just going to take a little bit longer than anticipated. And the market reacted. All the markets reacted. Not only just the stock market, but the bond market has been moving in a crazy way. And that's really where we need to be looking. I tend to believe that the bond guys are mostly smarter than the stock guys, especially when it comes to the economy. And they're screaming that interest rates are going up.
Yeah. Well, you've always said that, the bond traders are trading on, penny or less margins, of course, billions of dollars at a time. And equity guys can be a little less accurate. 1% to 2% each way is a little more forgiving than 1 to 2 pennies on a huge trade for bonds. So I've just always found that interesting to listen to the bond traders. That's kind of fun to dive into.
Yes, it is. Yes, it is. And it's kind of we've been hearing about this yield curve inversion, how bad it is, and kind of give you an idea what the bond market is thinking. The inversion, we're going all the way back to July 19th of this year. That's where I could see the highest. But the difference between the 3-month and the 10-year was 1.74%. That's dropped all the way down to 1%.
Wow.
Big moves. The 10-year Treasury has gone from 3.75 to 4.35. What we normally see on these yield curve inversions is the yield curve fixes itself before we actually go into a recession. That's a crazy thing. It's more than likely going to fix itself, and it's moved that much. And it just seems like very recently the bond market is saying they're giving up. They don't want to be locking in, think about it, they don't want to be locking in 4.35% if 2 months from now or 6 months from now, the 10-year Treasury drops back down to 3.
Right.
And they've finally given up. So those bids are, interest rates are going up in a meaningful way.
Yeah.
And, it should. It doesn't look like inflation or our inflation is coming down anytime soon. anybody looked at what they're paying at the pump right now? This is just crazy. Oil's gone from $67 up to 91.
Yeah.
That's a
Yeah.
26% move, over 25%. And
Yeah.
that's been very recent. So, just think about what all that affects. Food, the amount of your discretionary spending, all of it.
Well, and they're not saying that's going to weaken either. They're talking $100 oil.
Yes, we're not, and yes, it is a U.S. thing, but and this is the problem globally, that nobody's investing in oil. Nobody's really drilling to the amount that we need. I know there's an argument that no, we haven't slowed down anything, but that's just not true, because we need to be drilling more to have the same amount of output. Because every amount of oil we pull out of the ground, there's less pressure and less oil is produced.
Yep.
So you have to continually drill to keep your production on par or increase. That's right. Not happening. Oil's going to go up.
Yep. Yeah, that's super interesting too. And another thing, I think, kind of switching gears a little bit, that we wanted to touch on, the Santa Claus rally, right? Historically, it's sell in May, go away, come back in the fall and feel the Santa Claus rally. And I think, most of the time, the thought behind that, right, is that people are spending money for the holidays. They're traveling more. They're buying gifts. They're spending some money. And then, two, historically, companies give the Christmas bonus, right? So what are we kind of thinking this year? Is it going to hold up? Is the age-old tradition going to hold up, or what's going to fight it?
That's the million-dollar question. And the research I've been seeing, and what the general consensus is that this is going to be a weaker holiday season, especially on the sales front than in years past. But just think, we've been saying that all year long. And guess who's been the savior of our economy? It's definitely not manufacturing, service, consumer spending.
Yep.
All that it's acting like everybody's won the lottery. So I think the big surprise is going to be that the holiday seasons are a lot stronger than anticipated. And it's working out great. The market's been weak, especially the last month or two. The market's gone up, got up to a positive 5% over that time, and it's given it all back.
Right.
And a lot of that's been in this week, but it's setting up well to have a nice little rally going into the end of the year.
Yep. And
I think that's going to be the big surprise.
Yeah, I hope so. I know I was visiting with some business owners that are getting their Christmas inventory, and they're a little bit nervous about what that's going to look like. And I know that production in some industries is still behind. So it's kind of the prayer, right? Because I think our clients would all stand to benefit from a rally in the markets, and then our business owner friends could all stand a little bit of relief from some of the beating that they've had with some of these interest rates. So it's kind of been a little bit of a blessing for everybody. But of course, we want to look more long-term than the next couple of months, but we'll just kind of wait and see. It's quite interesting. But Aaron, we're going to kind of get wrapped up today. We're running into our time, but I want to give you one last opportunity. Is there anything else you want to share, or any message you want to send to our clients about what you're seeing before we wrap up today?
Risk is important. Risk is very important. And up until very recently, it hasn't been paying to take risk off the table. That's recently changed, very recently. So the market is starting to behave more like it should. So hopefully all this confusion clears up. Just everybody hang in there and try not to watch TV.
Yeah. Yes, that's right. Shut the news off, right?
Or don't watch the news. There you go. Watch TV.
Yeah.
Keep off the news.
Yeah, another quick plug. I know many of you have kind of worked with us through this Schwab transfer. Just a reminder, if there's something you're not seeing or things you need help with, questions on the market, questions on the changes, please call us. We're here. We're here to serve you, and we want to do that for you. We really want to take care of you and love on you. And, it's so important that we stick together through these times. And anyways, just want to make sure that everybody knows that we are one call away from helping in any way that we can.
Especially if you're having trouble seeing your spouse's accounts along with your own all in one place, let us help you get that fixed.
Yeah. Thanks for mentioning that. Yep. Yes. Exactly. Yeah. Any little thing, if you're not seeing it the way you want to see it, like Aaron said, let's get you on the phone. So, Aaron, but that'll wrap us up today. Thank you so much for jumping on with us. I know everybody's enjoying it, and we'll wrap up today's episode of Black and White Market Minute on Life Planning 101.
Thank you for joining us for Life Planning 101, brought to you by Smart Money Group and Kennedy Financial Services. If you have questions, you can email them to lifeplanning@kennedy-financial.com. Be sure to tune in next week for more Life Planning 101. The opinions expressed herein are those of the firm and are subject to change without notice. The opinions referenced are as of the date of publication and are subject to change due to changes in the market or economic conditions and may not necessarily come to pass. Any opinions, projections, or forward-looking statements expressed herein are solely those of the author, may differ from the views or opinions expressed by other areas of the firm, and are only for general informational purposes as of the date indicated. Securities offered through Calton & Associates Incorporated, a registered investment advisor, member FINRA SIPC. Investment advisory services offered through Smart Money Group LLC. Kennedy Financial Services and Smart Money Group LLC are separate entities and are not owned or controlled by Calton & Associates Incorporated.